Well, it's great to see you again. I'm Ron DeLegge with ETF Guide TV. Going to give you a rundown of what's going on in key financial markets and the ETFs tracking them. Also, besides that, we're going to give you a lesson in proper investment positioning and proper tax positioning. They're two separate things, and we'll explain that on today's program. So let's start with what's on your mind. This was a poll we had on ETF Guide TV's community tab asking you, what is your Bitcoin price forecast by mid-2024? And look at you. Almost half of you said 100,000, 22% said 50,000, and then 21% said, you know what? I don't care. And look at this. We're closer to 50,000 than we are 100,000. So kudos and hat tip to those of you that have been, let's say, modestly bearish on Bitcoin. I wouldn't say hyper bearish, but anyway, that's what you think about Bitcoin prices. Of course, that big halving event has not given Bitcoin quite the boost on the upside that some expected. The other question we had on our community tab was, what are you going to do to protect yourself against the coming wave of higher future income tax rates? We had two correct answers and two badly incorrect answers. And the incorrect answers, almost 40% of you said do nothing, which is the wrong answer. And then some of you said, I'm going to increase my tax-deferred retirement savings to things like my traditional IRA, my traditional 401k. Again, that's the wrong answer. You're not eliminating taxes or hedging yourself against the future increases in income tax rates. You're simply deferring your tax rates or taxes until a later date. And if when you pull that money out at a later date, they're at a higher rate than they are today, well, then you lose. And so the correct answer for dealing with the coming threat of imminent threat of higher tax rates ahead is to do as 41% of you said, I'm going to increase my savings and investment in my tax-free accounts like Roth 401k, Roth IRA. And those of you that have lots of money, maybe too much money in your tax-deferred accounts, you can also do what's called Roth IRA conversions. And so this is a quick visual before we get to the market stats of the three places that our money can be located from a tax perspective. So this is correct tax positioning. You got your taxable bucket, tax me now, tax deferred bucket, tax me later, and then the tax-free bucket, tax me never. So if you took the greatest investment of all time, whatever that is, or your favorite investment, which of these three buckets would you want to have that investment held in? I know which one I would want my money held in. Obviously, it'd be the tax-free bucket, but that's the only bucket, by the way, that tax-free bucket, the tax-me-never bucket, that permanently hedges you against higher coming income tax rates. And we've got some examples cited there below. And so the solution or the strategy, if you've got too much of your money in your taxable bucket and tax-deferred, which is, I would say, most of the population, that's most investors, is to shift money. Begin rerouting it to the tax-free zone and getting it permanently protected and hedged from the coming threat of higher tax rates. We are at income tax rates that are at multi-decade lows. They're going to stay like this through the end of 2026. And at that point, strike that end of 2025. And then we go back to what previous tax rates were or possibly substantially higher. So take advantage of currently low U.S. income tax rates. Here's a big picture view on a global scale of equity markets. Most are in green. We got a few that are down, being led by Brazil on the downside, EWZ. That's the worst performing single country, major country out there. And then you'll notice, too, that a lot of the weakened performance is being concentrated in international and emerging markets. And we have come down from our first quarter highs in terms of equity prices. In terms of industry sectors within the S&P 500, 9 are up, 2 are down, and being led by energy as well as communication services and financials. Those are the top 3 performers. You'll notice those 2 down performers are down modestly, so not yet what we would call full-fledged bear markets. Now, if we take a look at the major key asset classes, this is a a big picture view of how they look versus each other since the start of 2024, you'll notice two areas jump out on the bullish side. Bitcoin, FBTC, which is a spot Bitcoin ETF that was launched at the end of January, still up over 34% despite the recent sell-off in Bitcoin itself. And then SDCI, which we're going to touch on in a little bit more depth, tracking a broad basket of commodities ahead by over 14% and outperforming S&P 500 along with U.S. bonds and global real estate. Some of the weakness in real estate, those of you wondering, not just commercial real estate, but also recent weakness that we've seen in some of those home builder ETFs is due to high interest rates. We're looking at probably higher interest rates for longer, and the Fed is probably not going to lower interest rates as soon as some had expected. And we see 30-year fixed mortgage rates about hovering around 7%. And if we look at this, how this was just a couple of years ago, we were under 3% for 30-year mortgages. So the cost of financing all of that real estate a lot higher today than it was before. Getting a snapshot of SDCI, which we touched on earlier, this is one of the absolute best diversified commodity ETFs, what we would call a core ETF for commodities. And why doesn't anyone talk about it? Why doesn't it get more airwaves and more love than it does? Well, we're going to give it some airwaves right now because SDCI hasn't just outperformed gold itself by almost double over the past 3 years, but look how it's done versus its much better known and much larger peers, DBA, GCC, GSG, all diversified commodity ETFs that are much bigger in terms of assets, and they get much more attention, yet SDCI has easily and effortlessly outperformed all of those by a wide margin. It's up by around 77% over the past 3 years alone, and it is a fantastic core diversified commodities ETF. If your portfolio lacks exposure to commodities, and I think most investors are either underrepresented or have no exposure to commodities, SDCI is a good place to start. Plus, if you own it in a taxable account, there's no complicated tax reporting. You got no K1s with that. And so check out SDCI. We had the CEO of USCF Investments on ETF Guide TV a couple of months ago. We're going to have him back. He was talking all about how SDCI employs a dynamic methodology for weighting different commodities. Some of those commodities, like cocoa, are totally ignored by other commodity ETFs. Well, not SDCI. Cocoa, by the way, at record highs. So being able to take advantage of those opportunities when they arise is something SDCI has been able to do. Now, let's talk about Nvidia because it's been in a correction mode over the past month or so. And these are some Nvidia-linked ETFs from Direction. Just a quick correction. This is now a 2X ETF on the bull side. That change happened earlier this month. It went from 1.5 daily leverage to 2X or 200% daily leverage. So that's NVDU, which despite the sell-off is still up 64% since the start of the year. It's paired with its bearish counterpart, and that's NVDD. And you'll see NVDD has not been a good performer since the start of the year, but over the past month, it's actually shown some real nice performance. So if this correction in NVIDIA continues, watch NVDD because it is designed to go up in value when NVIDIA's stock price goes down. And this is some of the changes that I alluded to that took place with NVIDIA, along with 5 other ETFs from Direction that are single stock ETFs. They're on the bullish side, tracking Apple, Amazon, Alphabet, Microsoft, and Tesla. So these ETFs switch their leverage points on the bull side, going from 1.5 to 2X daily leverage. And those are the ticker symbols. So check that out. Now, in terms of another area that doesn't really get discussed as often as it should is uranium. And we have a new original series called Shifting Energy on ETF Guide TV. Hopefully you've seen some of those episodes. Well, this particular ETF, along with its smaller counterpart, URNJ, which tracks small cap uranium stocks, Both of these ETFs were featured on a recent episode of Shifting Energy. And as you can see from this 3-year performance chart, uranium has been a star performer. And those of you wondering, well, how do I outperform the broader market? Well, here's the answer. Focus on areas of the market, sectors, or groups that may not be quickly or widely recognized, or maybe that might be growing much faster than the broader market, and allocate money in those areas. There's a lot of reasons behind our uranium's surge in the past 3 years, and why some good reasons on why that may continue with the renaissance of nuclear power. Yes, can you believe it? I'm saying renaissance in nuclear power. It's making a big comeback. So that has been good for uranium. So let's talk about the big money. Where has the big money made their fortune? Where is their wealth being concentrated? Well, you take a look at the top 14 billionaires, and more than half, more than half, have their money and made their fortunes in the technology sector. And there you go. That's the answer. I think from an investment perspective, what is that saying? Well, we talked earlier about correct tax positioning, right? We want most of our net worth to be in that tax-free bucket where it's permanently protected and hedged from the threat of higher U.S. income tax rates. That's correct tax positioning. Well, correct investment positioning is having those investments linked to areas that create significant wealth. And certainly technology and everything related to it within technology. And that includes AI, it includes software, it includes cloud computing. You can also throw in cryptocurrencies, blockchain technology. All that stuff is creating tremendous levels of wealth, not just for the top billionaires, but for others that are smart enough to notice. ETF Guide TV is now available not just on YouTube, but all major streaming platforms. We recently added Apple TV, so check us out there. Also, we added 2 new playlists. We have one from Direction and one from USCF, so be sure to check that out. And then I mentioned earlier our original series, Shifting Energy, which focuses on this mega theme of this massive global energy transition and alerting you about the investment opportunities in the ETFs linked to that are going to hopefully benefit from that, and how to position your investment portfolio accordingly. And then finally, I've got a free ebook available to all of our viewers. The download link is in the description section below, and it's got 2024 updates, and there's several key areas of this free ebook that I want to point your attention to. Key areas like covering healthcare in retirement, estate planning, distribution pitfalls. That's a big one. In other words, when we start taking out money out of our investments to live on that income, well, there's some major mistakes that a lot of people make that you need to avoid. And then also you want to stay disciplined. You want to also reduce taxes and make sure that you're maximizing your Social Security income. So again, that ebook is available for free in the description section below. We've got new episodes of ETF Battles coming out this week. We also have a new episode of First Look ETF, so be sure to check out our playlists. And hit me up in the comment section below. Let me know how you're doing. I'm Ron DeLegge with ETF Guide TV. I'll catch you on the next episode. Thanks for watching.